is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're here 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. It's Fed Day. To begin, a great relationship, know what you want. Know what the needs of your body are. Know what the needs of your mind are. And what fits well with you. There are millions of men and women. Some will be a good match for you and others won't. The two of you only need to be like a key and a lock, a match that works. Market-wise, let's take a look at it out here. We have the Dow Industrials down 12, up 12. NASDAQ up 24. S&P's up 3. Gold contract down $5, trading at $1,200 an ounce. You get silver down 7 cents, $14.42 an ounce. Light sweet crude off 65 cents, $71.63 a barrel. Notes and bonds. You get the 10-year note up 9 ticks, 118.23. 30-year bond up 23 ticks, 140.16. King dollar up 44 ticks, trading at a price point of 94.765. The euro is at 117.64 to 1 US dollar. The yen is trading at 112.81 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's go take a look at them. They're weak, folks. The bottom line is that the SPY has tested the lows of the high. Bottom line, my take is that it should have been able to get to that high. So that, you get the Fed come out with 25 basis points. Bottom line, you got the test that was done. It had to test it because it was a high volume high out here. Now with that saying, it wants to back down. So we'll see what kind of a back down we get tomorrow morning. You're up 43 cents, no big deal there. But it's because it tested the low of the high, it doesn't have to test that high again. And that high that we're talking about was last Thursday. Last Thursday, we got at a price point of 293.94. NDX 100, we take a look at the 3 Qs. What do you have with the 3 Qs? 3 Qs up $1.05. They're right into September 5th. September 5th, the big number here. The top of that is 185.55. We hit 185.99. You're under that right now. We are going to have lighter volume. So the real question is going to be, coming into this close, is it going to be able to get up above the 185.55? And if it doesn't, that's going to be a failure on price and volume also. And the small caps, Russell 2000. Russell 2000 is going south with volume. The number on the Russell 2000, the longer you stay under $170.20, higher the probability is that you're going to run down to the bottom of this range, which is 162.26. What the small caps are doing, they're down 56 cents. They're going after the low that was established out here on Monday. That low was 168.76. We've hit 168.83 today. And if we take a look at this intraday, yeah, it's still building cause. This last 10-minute buy just had some juice on it. Still building cause to get down there. Gold contract. What do we have with the gold contract? Gold contract, folks, is always volatile on Fed days, and today is no different. Bottom line is that what you had with gold, if I bring this closer, when you're going to see, it's pretty amazing. Gold contract, you go to 2 o'clock, you spiked up to 12.04. By 2:30, you're down at 11.94. They slam it down, but guess what? Gold has a high volume, high now at 1204.50. That's on an intraday basis. That's saying it wants to go back to that level. And if we just reverse that deal and we go over and take a look at King Dollar, what you're going to see with King Dollar also has a high volume low, which it wants to go back to. The dollar went down to a price point. This is the dollar index, went down to a price point of 93.520. Huge volume. That's where the test, I suspect, is going to come. Went back topside, hit 94, but 94 didn't even get it over the, well, actually, 1 second. Yeah, 94 got to the top of the range. Bottom line, what I expect you're going to see out here as we come into the close is that you're going to see the dollar continue to go lower, and we'll see gold and silver. Gold is going to be fighting it out. Silver, let's go take a look at the silver contract. What silver did do yesterday is this. Silver had a nice sign of strength yesterday. It got above the consolidation it had been in, and we're staying above that right now. You're down 7 cents, but this move yesterday was a decent move. Yesterday, you got above this area of $14.25 to 30 cents. You did it with volume. We popped up there with 97,000 contracts. Right now, we're doing 84,000. That is eaten into the bar when it had that vicious downdraft on the 4th of September. That's when silver went from $14.50 down to 14 bucks and had 141,000 contracts. So there were big numbers right there. Okay, notes and bonds. Let's go do the TLT first. So this is what it's all about, interest rates, folks. TLT up 65 cents. Now the TLT is the ETF for the 20-plus Treasury bond fund. So that everything that's inside this is treasuries that expire from 20 years to 30 years. Yesterday was a beautiful test of a low. Yesterday we came in, we tested a low at 6.5 million versus 13. Today, you're 5 million on the way up. Bottom line, wants higher price. The 10-year, same type of 10-year note, same type of setup. 10-year note out here. You've done 1.29 million contracts. This has to get back inside now the 118.27. We're at 118.23. I do expect we're going to get back inside there. Why? Because if we go over to this 30, we take a look at the 30, what you're going to see with the 30, folks, had actually come down, tested, and rejected its May swing low. Comes off of that, now gets a small sign of strength. Bottom line, we're up 21 ticks. You've done 260,000 contracts. I suspect that this is going to keep going into a higher price, lower yield. Right now, on the 10-year, we are at 3.06, and 3.11 is the high for the last year. It's really impressive, actually, that the Fed's saying, hey, listen, we're still going to be going up on rates. They removed the accommodative wording from the statement. If you look at the Fed Fund future rate, November, bottom line, no rate hike probability. December, we're at 77. So we're going to get a bottom line, another 25 basis points in December. Now, what that does, that's going to basically bring that rate up to 2 to 2.25. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials up 31. You get the Nasdaq up 32. S&P's up 5.5. Let's go take a look at the strength inside the NDX 100. Strength out here, you got Alexa Pharmaceutical. That's up 5.4%. Mercado Libre is up 5%. You get Tesla up 3.6%, and JD.com is up 3.2%. Taken away from it, Citas is down 4.7%. You get Seagate Technology off 2.2%. Wynn Casinos is off. Wynn Resorts is off 1.6%. Inside the Dow Industrials, let's see what we got inside the Dow. Okay, movers inside the Dow Industrials. IBM, oh, check that out. IBM's the mover. You never see that. That's putting 22 positive points in. Disney's putting 13. Disney is going to be selling their Sky shares to Comcast. They had owned, when they bought 21st Century Fox, they owned 39% of the Sky shares. That was the battle that Disney and Comcast had this past Saturday. Comcast won the battle. Now they really won it, because now they're going to own 100% of the company, with Disney selling them 39%. You have three, well, they might not be 100%, but if it isn't, the other folks who own 1% or something, they should turn in their shares. That's the bottom line. 3M is putting 9 positive points. Home Depot putting 8. Taken away from it, you get Goldman Sachs putting 15 negative points. You get American Express putting 9. Travelers is putting 8. Chevron is putting 6.5. Let's go over to the oil contract. We come out today with the EIA numbers at 10:30. Crude oil right now is trading down 0.9%. You got a price spread out here today from 71.47 to 72.48. That being said, bottom line is that, yeah, you're backing down, but the volume's awful light on the back down, you know. So the number to keep your eye on is $70.63. You get back inside that, that means you get back inside the range, because we had broken out of that range last Thursday. We got over the range that we've been trading in for the last 6 months. That being said, XLE has been showing that oil wants lower, because the XLE hasn't been able to hold a higher price. Oh, this gets interesting too. This XLE, the way this is set up, folks, it's almost a tri-star doji. That's interesting. Last 3 days, those are really hard to do too, because what happens is that you have to gap up and you have to get back down. But bottom line, you can't hold price. And of course, what that's going to be all about is Chevron and Exxon. Chevron right now is down 88 cents. You know, you had a high out here 5 months ago at 131. You're at 122. That was Chevron. Exxon, you're at 86. You're down 35 cents. Oh, they're all set up the same. Man, that's going to be wild. Yeah, same type of setup. 877-927-6648. Let's go take a look at some of the higher volume equities out here today. And what you have, oh, GE's still there. GE's in trouble. GE's up 14 cents right now, trading 11.41, but monster volume. You're into the bar from the highs of the lows of 2009. That's saying it wants to basically continue to dig into that bar. Facebook is up 323, still no big bid. SurveyMonkey came out today and went public. Look at this. Let's pull this up because this is pretty wild. Let me pull this over here. So SVMK. Okay, SVMK. This is quite an expansion of price. Excuse me, folks. So let's see. Yeah, look at this. You got a 50% move up, folks, on the equity. This is pretty intense. So this went public this morning at $12. It's trading $18. Let me see intraday what this looks like. Okay, so it popped to 20, gets down to 17. Yeah, bottom line is that they're valuing this for quite a bit more than the market went IPO at. And what did happen with this one, you know, I don't know what the exact number was that they had to start, but they actually brought down the number that they were doing the IPO at. And you can see that it looks like they didn't actually have to do that because the amount of buy-in was in that equity. Snap's down 4 cents, trading at $9. You get Apple is flat out here today. Let's go over to Amazon, take a look at Amazon. Okay, so Amazon's up 15 bucks. That's going after its highs again. Google, it's up 6 bucks. No big deal there. Netflix. Okay, Netflix got some juice. Here we go. It's up 11 bucks. And yeah, you're coming into a swing here. This could get interesting with Netflix. So the highs of this consolidation is 376. Yeah, 380. This wants to break topside and it has volume. Could be a small ABC up. Your A point on this is 310. Your B is 376, so you get 66 bucks. Let me just do something else here. Make sure that didn't do. It might have done more than a 0.382. I mean, more than a 618 retracement when it came down, though. Let me bring this closer. Okay. No? Yeah, it can be an ABC up. Okay, so it did just less than a 0.618 retracement. So when you do an ABC up or down, folks, you can't retrace more than 61% of the last move. So your A point on this is 310. Your B is 376, 66 bucks. Your C is, that's a $400 stock. And you know what? Actually, you know what's so cool about that? When I was listening to our man Jason Path this morning on Morning Market Kickoff, which he kicks us off 8:30 in the morning every morning, he's looking for 400 bucks, and it's a free. The price projection is $399, and all of this needs. It looks like it's going to do it. Yeah, it needs. In order to do it, it only needs a couple 100,000 more shares. 11.87 million, and we're already at 11.66. So that'd be pretty cool. That's a small ABC structure on the way up. Let's go take a look at the GDX out here. Fed Day, of course, moves equities around, but it particularly really moves around gold equities. So this is down 37 cents. Has some volume in the move, man. This is not great. So this is saying that 1829 is game. 1829. is the high where we came off the strength, where we came off the lows on September 12th. It looks like that's going to basically get down to that level. Now, we won't have the volume. I'd like to see it actually be, yeah, more than likely it's going to get down there tomorrow. Because you're pulling back, you get that expansion of volume. You were going into the downdraft from the 15th of August, and that's where it's building cause in order to get through. We're going to take a look at ABX. ABX is taking over Rango Resources. ABX is just backing into, yeah, ABX is just backing into a gap with light volume. This is a nice setup. It's a small ABC structure on the way up. Stay right there, folks. Come right back. Our phone number is 877-927-6648. You have the Dow Industrials trading up 40, NASDAQ up 40, S&P's up 6.5. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You have the Dow Industrials right now up 33, NASDAQ up 37, S&P's up 5.5. Let's go over to KBH, one of the home builders. So they come out with numbers last night. This thing, as you talk about a little volatility, this is pretty intense, actually. Intraday out here, this thing started up at a price point of a 26.80, slammed down to 23.64, and right now you're at the 24.74. With some monster volume. Now, it's going to be intriguing here is that you have the volume spike of 9.7 million didn't get to its lowest swing point. And it looks like it's going to just be a rejection of lower price. We'll see if they get the juice on the way coming higher. Let me just see something here. Yeah, it's been going up all day. If we go take a look at Lennar right now is trading down 66 cents. You're at 48.21. And all of these home builders, folks, if you take a look at them, what you're going to see is that you're back to where they had traded from March of 2017 over to March of March of 2017 over to October of 2017. That's a big consolidation. There's a lot of support looking at Lennar at this particular point. We go back to KBH for a second. What you're going to see, and now KBH my take on it is the weakest home builder there is. That being said, though, guess what? What KBH does have is that got a high volume spike at $38.80. So when you look at this on a smaller basis, you know, during the crash, KBH came off the lows of $5.40, makes the first run to 25, consolidates for a while, makes the next run to 38, and just pulled back to strength. And now I suspect we're going to go up and try to test that area. And that will be about for home builders, no doubt. It's affordability. What is the affordability that's going to be out here? You know, because bottom line, prices are going up. You know, lumber's going up, steel's going up, copper's going up, all of the above is going up, not excluding the tafts that are on some of these. Then, though, it's those interest rates. The interest rate is what real estate's all about. And the way that this 10-year and 30 years trading right now, it's like, okay, short-term rates are going up. But guess what? We still have more buyers than sellers inside the bond market, and for all of us, that's a good deal. There's no doubt. We're at 3.06 right now on the 10-year, so that's not going to kill the mortgage market, and that's pretty impressive in the aspect that the Fed, bottom line, is saying here. Well, let's go look at it. There, it looks to me that when we look at the Fed fund probability, that it's almost every other meeting next year that you're going up. And remember something, that the way Powell set this up next year, every single meeting, he actually has a press conference afterward. So if you happen to be watching Tiger TV, when you're looking at this, what you're going to see is that this was the, oh, look at this. This is pretty wild. So the meeting in November, bottom line, has basically right now a 0 chance of going up on rates. Now, that was at 4 or 5% this morning. The one in December, however, 77%. And these move around quite a bit, folks. It's not like they don't move around. They move around quite a bit. Now, they won't move. Today would be the biggest movement. We just went from 72% to 77% in November. But you can see, as you go through this, then as we go out to the scale, you're going to see in the January, so you go from December and then January 30th, so about a month and a half, that goes down substantially. That's only like 4%. You get into March, now it goes up to 45%. And outside of that, the numbers are pretty small at this particular point. If you do look, you'll be hearing a lot about the dot plot. If I put this dot plot up for you, the dot plot looks pretty scary, actually. When I look at this dot plot, it's like, it's going to be pretty interesting comprehending, you know, rates. 10-year, I mean, a bank-to-bank rate that's even 3.375. So when you're looking at this, on the right-hand side, that's where we are right now. The implied rate, bottom line, is approximately 2.25. And you can see the expansion on the way up, though. In 2019, you go to 3.325. And 2020, you're at 3.37. And 2021, you're at 3.37. Now, watch how this goes. You see how this is going down now? So the betting here, if you're paying attention to the dot plot, is that the economy will continue to rise up till 2020 or 2021, and then you're going to have something come in the economy, and that they're going to have to lower interest rates. That's the theory behind this dot plot, by the way. Powell, you get asked a couple questions about it today. He thought it was good because the investors, the traders are paying attention to it. So when you look at it, you say, okay, if you look at this and say, okay, this is what's going on, you can make arrangements going into the future if, in fact, you're going to have higher rates and or lower rates. Dow Industrials right now, and this is, you're going to love Fed Day, man. And I remember Mr. Dave White was talking about this on his program. The last 30 minutes of trading in Fed Day is what it's all about. And look what there's no doubt, man. It's pretty wild here. So watch this. If we take a look at the Dow Industrials. The Dow Industrials, right, intraday out here. Intraday, we got up to a high of 26,606. That was at 10 past 2. Well, we just came off 150 points. Bottom line, we just came off the 549. Yeah, we come off 75 points in 20 minutes right now. And what it's doing is it's going under the lows of yesterday. It's only down 8 points right now. That's not the point, but the point would be that you try to get the higher price, couldn't handle higher price, you start backing down off of that number. We'll see where the rest of that shakes out. The composite, the NASDAQ composite's still hanging tough. We're up 21 bucks. That also is going to be a failure, though. That September 5th downdraft is a monster. The sellers are just sitting there, right at that September 5th level. If we look at the NDX 100 with the Qs, you're going to see the same type of setup. The last actually swing highs were 185.48. 184.94 and 184.88. Yeah, and we're at 184.94. You close under that one, meaning the 94, that gets even more bearish. Why? Because you can understand how the NDX 100 was going into September 5th downdraft. The other little swing points on the way up, that's all they are, is little swing points they should have been able to hold. Bottom line, you know, there's some folks taking some money off the table here. That's where this is going. The 30-year bond is still hanging tough. 10-year note is still hanging tough. Gold really doesn't know what to do. The good news is with gold, it didn't break a swing point. You have the volatility inside it. You've rejected the lows of 1194. You know, you're going into the strength. The beginning of that strength was 1128, and you're going to have lighter volume. So the struggle's still out there in the metal market, no doubt. Stay right there, folks. Come right back. Dow down 15, NASDAQ up 19, S&Ps are flat. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 18. You get the NASDAQ up 16. S&P's are flat out here. We have gold trading down to 630. Silver is down 9 pennies. Light sweet crude, that's down 69 cents. Bottom line, what's going to be interesting about, well, here, let's go into the gasoline market. So you've had the light sweet crude market go higher, as has gasoline. Gasoline right now, we're 205 unleaded wholesale. Now that is right at the highs, going all the way back to the 22nd of May. 22nd of May, we're at 211 wholesale. Let me pull this back. XB1. So XB1. Okay. Oh, this is pretty cool. So if we take a look at this on a much continuous contract, you're going to see it hasn't broken its downtrend just yet, which is good. When I say it hasn't broken its downtrend, we're at $2.28 in May of this year. You get down to a price point of 192. You're coming right into the consolidation. Yeah, we'll see where it shakes out. Bottom line is that we know, gasoline, that's what hits all of us. And that hits it. It's fast, furious, all of the above when that does come down the pike. Let's go take a look at the financials. There we go. Look at this, folks. You got to love it. Interest rates are staying low. Look at this. We were talking about this yesterday. What had happened is this, is that the XLF had broken out last, last Wednesday. Goes topside, has some juice on the way. It's been up at this level for 6 months. It got above it Thursday, Friday, start coming back inside it Monday. It got back inside its range Monday. Guess what, folks? You have expanded volume. This is saying flat out that the, number one, that the rates are going to stay low, that the spread in between the bonds and the notes are also going to basically stay tight. Because what you have here is now, this is down with some real volume. And if the banks were going to make money hand over fist, well, they always make money hand over fist, but if they're going to make it just on the spread, you'd see this a lot higher. Because the differential on a spread goes like this, is that the banks immediately make more money. They don't even have to take more money in. As the spread widens, everything that they have in-house widens, meaning the profit margins widen. In this particular case, you can see JP Morgan's down $1.43, back in the lower range. Bank of America, BAC, same deal. Bank of America actually looks like it's going to break a swing point with volume. Was $30.08. Haven't hit it yet, but it looks like it's going to. Citigroup, we go take a look at Citigroup. Same setup in Citigroup. Berkshire Hathaway, BRK, that is still the largest weighting structure inside the XLF, and that's also down. Not Berkshire's not down with volume, though. But this Berkshire's had quite a run. You go back 3 months ago, Berkshire's $185 stock, runs all the way up to 223. Right now, you're at 216. So there's no two ways about that. That is had. Actually, let's go look at IBM. When I was looking, because when we brought up the Dow Industrial, IBM is the largest mover point-wise inside the Dow. Oh, look, and there's nothing there. Interesting. Okay, so you're up 274. You're into the gap. The gap we're talking about is 152.63. This is where IBM gapped down in April. Yeah, there's no juice here. Let's see when IBM's coming out with numbers. So October 16th, Big Blue comes out with numbers. Yeah, they've been contracting for some time. If we look at the fundamental numbers on Big Blue, well, it's still hanging about 80 billion. They're doing about 80 billion. 2014, they were doing 92 billion. This year, they're doing 80. But last year, they did 79. Next year, they plan on doing 80. When you look at their segments, this is pretty sad. When you look at their segments, folks, they are not growing on one segment. So look at this. So when we talk about, first we're talking about country-wise. They're contracting at 1% a year in Americas, so South America, North America. They're contracting 2.5% a year in Europe, Middle East, and Africa. They're contracting 1.8% in Asia and the Pacific. That's the country-wise. Now, when you take a look at their business model, their systems is contracting by 4% a year. Their financing is contracting by 1.8%. Their technology and cloud services, which should be growing, okay, is contracting by 1.3%. And their cognitive solutions in industrial is contracting by 1.3%. That's pretty intense, man. They got a lot of work to do. Holy cow. Talk about a lot of, well, they're 10 times better off than GE right now. Let's go take a look at GE. GE, I suspect what's going to happen with GE, folks, is this. It looks to me that when all said and done, GE probably is going to get in deep trouble, but there's going to be no money left from cooking their books for so many years. The reason I'm saying this is that you're going after the lows of 2009. The high of that low is 1135, which we're trading at right now. The low is 572. What has already happened at GE is that the companies they've sold, they sell them also with the aspect that they are on the hook for their legacy issues. Well, those legacy issues specifically have huge amounts of debt and huge amounts of hidden debt, I'd say, that seems to come out of nowhere. But yet, if you're an accountant, it really doesn't come out of nowhere. Just give you an idea. So they get Genworth, right? Actually, let's see if we can bring up Genworth. Okay, so I remember when they sold this. This is one of the first ones they sold. Now, this is, oh, Genworth, J-E-N. Okay, Genworth is trading at $1.32. Want to see something? Watch this. You're trading at $1.32, yet they're taking in $5 billion a year. $5 billion with the B, right? Their market cap is $213 million. That's all. So you're taking in $5 billion a year. Your market cap is $213 million. Okay, so what does that mean? Well, what that means, folks, is that you have a huge amount of debt out there that has not been disclosed. And what GE did, okay, is GE, when they basically pushed this out, they were on the hook for this is a long-term care business. And you take what happens is that you take an actuary, right? Their accountants are going to take actuaries and say, okay, we think we're going to pay this much money out. Well, guess what, folks? It's an estimate, and their estimates were so far off that you're talking about billions and billions and billions of dollars that GE is actually on the hook for. It would have been better if they basically BK'd these companies. And, I mean, I'm glad they didn't BK it, because the reality is then there'd be a lot of people that would lose their long-term health care, which is if you bought a long-term health care policy at the right time, one of the best investments you'd ever make. I mean, I've looked at some of those policies, and they're pretty incredible policies when you had the thing right. Well, look at that. See that? Man, Mr. Dave White, he must have been selling away. Only kidding, folks. But the Dow right now is down 97. Nasdaq's up 14. S&Ps are down 10. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 122. Nasdaq is off 20. S&Ps are off 11.5. That's quite a move in the market in general. A huge move in the Dow. We had been talking about that a little bit earlier. I mean, the Dow Industrials from the 2 o'clock, 2:30 time frame just went from 26,606 and went down 240 points. We're down 124, but the bottom line is that was the type of move that had. We go and we take a look at the S&P futures. You're going to see the same deal. And as I said at the beginning of the program, this high doesn't have to get tested because we did test the lows of the high today. And it should have been able to do more, but guess what? I couldn't. They just sold this baby down. They sold it down pretty good, too. We just went from a price point of 29.36, and we went down 26 S&P points. So that's a big number. NDX 100. Let's go take a look at the 3Qs. That's the only one that's still hanging there somewhat. That being said, guess what? It's fast. Just I'm talking, it just goes flat. So bottom line, Qs also just gave it up. They're right now at $184.17. They had been as high as $185.99, almost 186. And what that's saying is that guess what? 180. Yeah, let's say it wants to get to the bottom of this, which is 180.44. Small caps. Now, the small caps were already coming down with volume. Oh, look at that. Yeah, small caps. Now we're down to $1.69. That's good. That's got an acceleration, man. But the small caps, IWM's going after this 162. Right now, you're 167.80. Yeah, the small caps, they got some selling. It's interesting, then, they just start throwing everything at this market. We'll see where it shakes out. But notes and bonds, bottom line, they want higher price. King dollar basically is building cars for lower price. It's up $1.49, 149 ticks right now, trading out at 93.860. If we do go inside the higher volumes now, I suspect most of them are going to be more than likely red. And, you know, nothing huge out here, but bottom line is that, yeah, you definitely have more red than green. Stay right there, folks. Going to be coming right back with lots of numbers after the close. We have the Dow Industrials trading down 104. NASDAQ is off 15. S&P's down 9. We're coming right back.
You know what's cool? Taking something that's good for you.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But yeah. Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Kicking into the fall. Don't take anything personally. Your truth is personal to you. Your own opinions and point of view reflect your own agreements and are personal to you. It's no one's truth but yours. Market-wise, let's take a look at it out here. We had the Dow Industrials finish down 106. You had the NASDAQ off 17. S&P's down 10. You know, if we go over now and we take a look at the Dow Industrials, what you're going to see, Dow, you know, only down $100, which is nothing. That being said, though, price spread out here, it's quite a bit. We went from intraday, you know, the Dow had been up 26,660, 6,006 rather, and gave it all up. You know, so from that perspective, you know, you went down 218 points. And the NDX 100. We take a look at the NDX. That was a failure on price, failure on volume. Now the NDX had been one of the weakest indices, there's no doubt. What the NDX did, try to get up into its September 5th level again. Couldn't handle it. We got to 76.37. You closed at 75.63. Bottom line, got over these swings, closed underneath them. That's saying the NDX wants to now run into this 7,400 level. And if we take a look at the Qs and you see the correlation inside the Qs got up to a price point of $185.99. Closed at 184.27. Bottom line, that also wants to go back to the lower end of this consolidation, which is the 180. Small caps, man, small caps got whacked. Small caps, the IWM's down $1.60. You came in with 17 million shares traded. You're in the lower range. Anything under the $170.20, folks, keeps you in the lower range. We got that in the lower range. Now what you have is that the baby looks like it wants to make a run for 162.26. It's going to get kind of intriguing watching this baby shake out. Gold contract. What do you have with the gold contract? Bottom line, you had volatility inside the gold contract. We've done 329,000 contracts. The good news is that it didn't break the strength that it had on the 24th of August. That's where we went topside from $11.89 to $1,215. We did, I know we did months of volume. We did 400 and something thousand contracts there. So we're backing into that area today. And we're backing in. I got to pull that contract. Well, actually, you didn't. Oh, there we go. Yeah, you're backing in with 329,000 versus 294. But you didn't make it to it. That's the real key. Actually, one of the real keys. We didn't even make it to a minus swing point of 1192. Silver. What do we do with the silver contract now? Silver had a nice day yesterday. Silver went topside, had price spread, had volume behind the move. Today, you have silver down 0.7%. You back down with light volume. We really went sideways, and that's what you like to see. So silver looks to me that still haven't got a shot to go topside once again. And what does happen on Fed days like this, folks, is this. We had the volatility, no doubt, today in the marketplace. The volatility tomorrow will be there also. What's going to happen is that the market participants, all of us, we're going to digest what's going on out here today, tonight, tomorrow. You can expect high volatility. King dollar. What do we have with King dollar? King dollar, bottom line, moving sideways. King dollar, to me, is building cause for lower price. You had 20,000 contracts out here. You're 93,895. As King dollar is trying to get to lower price, the euro is trying to get the higher price. What we did have happen out here today, which has been very strong. The yen has actually been very weak. Higher price than the yen is weak. The yen gave it up today. It gave it up at $112.97. You're at 112.67 right now. The last high out here was the 113.17. So bottom line, what I expect we're going to see now, yen's going to try to back down, and if that's what we get, then you can expect some upward movement inside the gold contract out here tonight. If we go over to the Nikkei, let's go take a look at the Nikkei, because what does happen is that when you have a weaker yen, the Nikkei loves it. Well, you can see, like, we just went from 109 to 112, well, 110 to 112 in the yen. Well, the Nikkei just went from 22,000 to 24,000, and that's in 2 weeks. That's what a weak currency can do, because you got to remember something. On a weak currency, what happens is that correlation now is against the U.S. dollar, is that, yes, you're at a higher number, but you can't buy anymore. If you're buying something in U.S. dollars. You can certainly buy more if you're just staying inside the country of the currency. We go take a look at some of the higher volume equities out here. Let's go see what we have. You had, oh, look at that. I'm in Japan right now, so we'll change that. GE was up 12 cents. That's having big problems. And what you are going to have, that was the high volume stock of the day. So you're going to have high volume lows with bad price. Bottom line, lower prices coming at you. If you can see, these are the first top 24. And out of the top 24, there's only 3 of them that are green out here today. Facebook is up $2. Electric is up 12 cents. General Motors is up 18 cents. 21st Century Fox is up 49 cents. You got Comcast down 3 cents. That's nothing heavy. There's no really heavy ones here. Apple's down $1.77. You get J.P. Morgan. Oh, well, let's do the banks. The banks, folks, we are down with volume. What the banks are saying is that they're saying that the rate structure is going to stay low because these babies, they sold them down big. J.P. Morgan is down in 4 days from $29 to $27.97. Came back inside its, the range that it had been trying to get out of for 6 months. Bottom line, can't handle it. And that is all the banks. If we take a look at Bank of America, you're going to see the same type of setup. Bank of America down 54 cents at $30.13. Citigroup, same type of setup. So big numbers. The cool thing is for all of us out here, that is saying that rates are going to stay basically stable to low. The XLE, the energy. So oil today comes back slightly, nothing heavy. That being said, XLE is down 74 cents. The main culprits there, of course, largest weighting structure is ExxonMobil as well as Chevron, and they both want lower price. So that's encouraging that they want lower price in the aspect that oil is still up at highs. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials finished down 106, NASDAQ off 17, S&P's off 9.5. Let's go over to our man, Mr. Jim Prince, as we do each and every Wednesday at 20 past the second hour. And, folks, you can visit Jim every trading day at his website, Greatest Business on Earth, gbemembers.com. Check it out. Good-looking guy sitting there. And his... What's happening, brother?
Hey, how are you today, Tom?
Good, man. Yourself?
Excellent, excellent.
Good. So, we get Fed Day, we get some nice volatility inside the marketplace.
Yeah, I sent over a couple of currencies I thought maybe we could take a look at today.
Absolutely. And, where do you want to start?
Let's start out with the December Australian dollar.
Perfect. Okay.
And, yeah, so you can see how it... here today, this is a daily chart that I sent over. It reached up to that resistance line, also my 50-period moving average there on the chart, and then really reversed later in the day. And so basically touch resistance there, and now I'm anticipating that we're going to push lower here. So that right circle of an inverted head and shoulder pattern that I have there,
yes,
I think price is going to move into that based on my indicators here. And so I'm going to look for still look for this inverted head and shoulder pattern to perhaps form, but do it at a little bit lower price level.
Yeah, that'd be kind of nice after a big downtrend, huh?
Yeah, yeah, for sure. And really watching that, you can clearly see you're absolutely right. Really, since last spring, I think is when the trend really started to go down. I kind of based that off my 50 SMA there, where it kind of rolled over in April.
Yes.
And
Yeah.
definitely.
Boy, you know, it's interesting when you can catch a trend, man. You know, I mean, that's where I'm sure the trend is your friend came, because when you get long trends, man, you know, you never know when they break. They can chop around and come right back on the other side. But this broke a long time ago, and you'd be in the money since then, right? Yeah.
Yeah, absolutely, absolutely. And you never know when you're on a trend when you might be part of a super trend on top of that.
Yeah, that's a fact. Yeah. Next, we got. How
about the New Zealand dollar, U.S. dollar?
Okay, I think I did that one. Yep.
Yeah, we looked at this last week. I sent this over, and at the time we had that bluish ellipse there, and I was talking about on the show last week that I anticipated price would move up into that, and it did, and it touched that resistance zone above.
Oh,
and now
yeah.
I'm looking at, yeah, and you can see my little indicator there right below the blue and red line.
Yes.
It's kind of formed a double top, and I take that pretty seriously because momentum could reverse here. And so we could, and I anticipate here that price could push a bit lower, maybe even come down and test that green zone here on this chart.
And that kind of looks like the Australian dollar. I mean, the New Zealand dollar too, doesn't it?
Yeah. So yeah, like the Australian dollar that we just reviewed, you're absolutely right.
Yeah, it makes sense.
Very similar to that.
Okay, so next.
Yeah, so I thought we'd do something a little bit different here today. I sent over a futures spread chart for coffee.
Beautiful.
And
okay, I got it.
Yeah, so, and if you're, just in case your viewers aren't familiar with spreads, basically what we're doing is we're buying one contract and selling the other one simultaneously, and we trade the difference in price here. And so the difference in price, this is the March contract versus the July contract of coffee for next year, and it's in a base right now. And one of the things I really like about this, rather than having to put up a couple $1,000s in margin for the futures contract,
yes,
you can trade the spreads. The margin on this right now is about $82 per spread.
Really?
So, yeah, so you can get a lot of leverage with that. You still have the same risk per contract, but the leverage there can be pretty substantial. Wow. Especially when these begin to trend, and many times they do trend. A move from here, for instance, from like minus 450 to minus 400, that's about $375 per spread.
Yeah.
It takes some movement, but this is a seasonal spread. It typically begins to start to move in the early part of October out to the middle part of February. It's a seasonal spread that we track.
Now, when you trade a spread, right, like this, do you have to close that in two different transactions, or can you close the spread together?
Yeah, so we do them simultaneously, but you do have a commission on either side of that.
Okay.
And so because the March contract expires before the July contract, we'll need to be out of that sometime in February before
sure.
first notice.
Now, can you hit one button and be out of both of them, though?
Yeah, some trading platforms allow you to do that.
Cool.
You bet.
Okay. Yeah. No, that's cool. I've done a lot of different ones, and it's always intriguing because years ago you couldn't get out of that. Once they start getting those spreads that you can get out in one button, it's pretty cool, man.
Yeah, you used to have to leg out of them.
Yeah. And what happens there, folks, when you leg out of them, right? Like, I always want to leg out of my winner first, and then I'm looking at the other one saying, oh, am I going to leg out? What am I going to do? Yeah, it's like,
yeah.
Okay, so what's next?
So I think the last one we should look at here today is let's take a look at cocoa and start out with the cocoa 10-year adjusted chart.
Okay.
And this is another version of our seasonals. Again, we'll just kind of look at the blue line here.
Yeah.
And we adjust the futures contract through some different math. But the bottom line is here, the trend is down into the end of the year. And that's really the focus here. Trend is down over the last 10 years. This is the historical tendency. So with that in mind, if we pull up the December cocoa chart, the futures chart.
Okay.
And you'll see here that with that, today, the December contract down about 2% on the button here. And we talked about this a few weeks back, but now it's broken through a couple of layers of support here, actually at the bottom of my support zone, and just cracked the trend line support level as well. So I'm anticipating a move further down through that blue ellipse area that I have there, have that filled in.
Yeah, it's interesting, man. Like, I wonder why that, you know, it is what it is, but when cocoa is taking quite a hit, man. Almost from 3,000 a ton, 2,900 a ton to what, 2,151.
Yeah, big move for sure. And this market can catch fire very, very quickly in the different directions. You can just see the different little trends on this chart just on their own.
Yeah, and so buying those beans at the right price would be pretty cool.
Yeah, yes, it would.
Wow, that's so coming into the, let's see. So I guess, I mean, you really just kind of think of cocoa as like holiday season and Valentine's, but I bet they sell a lot of cocoa during Valentine's Day, right? I mean, makes sense, right?
I think they do. Yes, it tends to go up after it bottoms out here at the end of the year, and I think you're onto something there.
Oh, I see. Okay, so you get the seasonal coming down. Man, that cocoa chart is something else. And cocoa, but it's sub-Africa. That's where most of that comes from, right?
Yeah.
Yeah. I'd like to.
So you can, if you can, just the adjusted cocoa chart, you can see how after it bottoms in December or hits that low in December, it does indeed rally right into February. So right in line with your Valentine's.
That's pretty wild, man.
Yeah.
I wish it was that easy, right?
Yes.
You know, it's funny though, looking at that, right? That's pretty cool, man. Yeah. Because I mean, the reality is that that's something you could actually scale into too, right? You know?
Yeah, for sure, absolutely. Yeah, one of the things is we never trade those on their own. We always combine with technicals on the chart, on the futures charts as well.
Sure. No, that totally makes sense. That totally makes sense. Well, you know, it's going to be intriguing here watching the good old Fed. I mean, the bottom line is that, yeah, the Fed goes up, but the bottom line is that people are buying bonds again. Pretty cool. Pretty wild.
Yeah. Yeah.
Well, listen, man, it's always a pleasure. Look forward to seeing you and hearing from you next Wednesday.
All right, partner. Take care. Have a good one.
Thanks, Jim. That's our man, Mr. Jim Prince, folks, from gbemembers.com. Come right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. all new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the path of least resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 106, NASDAQ off 17, S&P's off 9.5. Let's go over and take a look at Bed Bath & Beyond. They just come out with numbers. Bed Bath & Beyond closed at $18.81. The low for the year is $16.52. The high is $24. And that low is going to get blown apart. We're at $16 right now. Let's take a look at that chart for a second. So 16, oh boy, that's quite a downdraft. Let's see. Whoa. Okay. Oh, this could be real trouble. This could be like going out. Okay, so $16. Listen to this. This is sad, folks. Okay, so $16 is the low of the crash of 2008. $16.23. Okay, now watch this. This is going to be trouble in paradise. This is going to be a going out of business sale. Okay, so you're breaking below the lows. Let me figure this out. Like, where is the ABC structure down? So let me bring this closer. Okay, so here it is here. So we go 21 bucks down to 17. It's not the end of the world. Okay, so 21.50 down to 17. You get basically $4. Well, it's not the end of the world, actually. We're trading at it right now, $16. But, you know, that being said, we take a look at this on a much longer term basis. You're breaking the 2009 levels, and that says, oh, I see what you're looking at. Oh, my God, $11. Okay, $11. Let's see what they had to say out here. But you know, this is a supplier too that I can absolutely see going out of business. One of them, without even looking at the numbers sometimes, or what it is, folks, is that if we just looked at their rent structure, you know, the size of their box stores are huge. They're in some nice malls. You can't do business like that anymore. Bottom line, just can't do it. You can't compete with Amazons of the world. Hey, listen, even Home Depot. I'll go to Home Depot next. What Home Depot decided to do today, Home Depot, folks, is going to be able to give you same-day delivery if you order online before noontime in many markets. Well, let me do the Bed Bath & Beyond first. So, earnings per share, they were, the estimate was 50 cents. Oh, they got smoked. They made 36, not even close. Revenue, 2.96 billion. They did 2.94 billion. Now that's good. That's good. But you can see their revenue, and that's where, you know, that's the expense ratio. The expense ratio of those stores is just way over the top, man. Just can't handle it. That's what that looks like. So that is one monster number. It's breaking down. It's breaking with volume. Let's go over to Home Depot for a second, because listen, this is pretty amazing. What Home Depot is going to do. Now, they are going to charge for the delivery, but they're only charging $8. So Home Depot, they're going to expand their same-day delivery. Let's see. Okay, so ongoing part of their $1.2 billion supply upgrade, Home Depot is starting same-day delivery in the United States to help stay relevant of the customer's need to yesterday mentality. That's a pretty good one. The home improvement chain has already been using trucks to deliver large items as building materials from stores in a day or so. And you got to remember something that, okay, so they're charging $8, $8.99. You know, you may have heard me talk about this many times. You know, when we're basically building houses, we're ordering tubs that get delivered from Amazon Prime for nothing. Check that out. You know, so they get their hands full. We still use Home Depot and Lowe's a lot too. But the bottom line is that, you know, Amazon has everything and anything. But here, let's take a look at it. This is a quote from the Executive Vice President of Supply Chain Management. We are over Our overachieving goal for our supply chain is to be the fastest, most efficient delivery in home improvement. To compete with Amazon and other e-commerce companies, they realize that they need speedy delivery of online orders, especially because web purchases are often the fastest part of the chain's business. They're growing the fastest part. It's pretty cool. In Home Depot's case, online revenue grew more than 20% in the first half of the year. Man, that's a good number. It's a pretty amazing number. Let's see. Using stores as distribution centers has created options that Amazon can't replicate. There's no doubt about that. Like enabling customers to pick up online purchases at the closest location to avoid shopping fees. It also has given the physical locations added value. Lowe's, Home Depot, and smaller competitors now just testing same-day delivery in a few markets. They better get going, man. You know, imagine you're sitting at home, you need some garden equipment, you want to build a shed outside. You get on your computer, boop, 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 put it up, $8.99 later, getting delivered to your backyard in 3 or 4 hours. That's a big number. Okay, so let's see. Delivery can be expensive, but yet what we look at is the delivery is helping us make stronger customer relationships. What they're doing is this. They're involved. Let me see this. It's a different company that's going to deliver for them, I believe. Let's see if I get another. Yeah, there it is. They're going to partner with startups Roadie and Deliver, D-E-L-I-V, to quicken the shopping experience. That's how they're going to get that done. Bottom line is that for all of us, I think it's you know, the tips of our fingers. That's what everyone's looking for. Saves a huge amount of time, though. There's no doubt about that, man. That's the amount of time that it saves when you can get something delivered. And you're not wrecking your car or your truck along the way. That's pretty cool. The Federal Reserve out here today, bottom line, they up 25 basis points. Let's get a couple quotes from Powell out here. This is one of the first ones. This gradual return to normal is helping to sustain this strong economy. Let's see. Growth and job gains have been strong, and inflation remains near the central bank's 2% target rate. Barring a negative surprise, updated dot plot forecast made a December rate hike almost certain, with 12 of the 16 officials now expecting another increase by year end. That grew from 8 in their June projection. Yeah, there's no doubt. If you are watching Tiger TV, you're going to see, I'm going to put the Fed probability rate up, and you're going to see that's laying out there in December right now at 77.5%. So that's going to be another 25 basis points hike. After that, it goes all the way out to March, actually. January doesn't look like it's going to do anything. Let's see. While calling the economy strong and financial vulnerability moderate, he also said that the central bank is hearing rising chorus of concern about tariffs and the U.S. turn to its protectionism trade policies. Asked about the pressure from the Trump to keep rates low, Powell said the Fed is focused on its mission to keep the economy healthy and doesn't consider politics in this process. After 8 hikes since late 2015, the Fed fund rate is now at the highest level since October of 28, just after the collapse of the Lehman Brothers holdings. Bottom line is that, you know, that being said, what we had out here, folks, is that after they come out with the numbers, bottom line, the market bought the 10-year notes, they bought the 30-year bonds, brought the rates lower. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go take a look at a couple of stocks get smoked out here. They're basically laser stocks. Coherent. Coherent's a global company that manufactures, sells laser-based photonic products. Instrument applications include optical telecommunications, semiconductor manufacturing. Bottom line is that, let's see what kind of numbers they take in. So these are monster companies. There's no doubt about it. Yeah, 1.9 billion they're taking in. That being said, oh, good, here, let me go back to that because I want to see what kind of space they're actually in. So, okay, the space they do business in, it's commercial, well, yeah, commercial lasers. Commercial lasers. I'm wondering if that's like part of what you need for cars. Anyway, bottom line is that this little baby opened all right this morning. Opened at 188 and then sold off all day with some big volume, man. No doubt about that. That's Coherent. Now let me go pull up LASR. This is called laser, I believe. Oh, L-Night. So this is L-Night. They design and manufacture semiconductor laser products. Okay. The company produces fiber laser direct diode systems. The low for the year is 22. The high is 43. This company takes in, oh, small, 192 million. Not like the billions of the other one, but it looks like they get smoked too. Oh, this has been getting smoked for a while. What's interesting is to, like, okay, what businesses are going down the tubes that is going that way, you know? Yeah, if we go to Facebook for a second, this is going to be pretty cool. What is happening is that, let's see, where, okay, so Facebook today, up $2. You know, Facebook bottom line looks to me like it's working its way down to the $149 area. You're up from, you're down from $218. And now what you have is you got a little fight with not only just you had the, yesterday with the announcement was that the Instagram two founders were going to resign from their positions. It didn't say when, but they were going to resign. And what had happened, folks, when Facebook bought Instagram, they were an autonomous company. So they allowed them to stay autonomous till they didn't. And that's why those folks, that's why they're saying, well, that's one of the reasons they're saying they resigned. But now you've got a nice class battle going on, because what had happened is that the founder of WhatsApp, he had basically quit quite a while ago. And when he quit, he left $850 million on the table. And that quit was over privacy issues. So let's see what they're having to say out here, because this guy was out here today also. Let's see. So the guy, let's see. So the co-founder of WhatsApp was Brian Action, and a Facebook executive. Now this just happened, so they're going to be fighting out here all night. So a Facebook executive is wading into the debate over how a social network handles the companies it has acquired, taking aim at WhatsApp co-founder Brian Action as low class. Action, who left Facebook almost a year ago, described his tenure at the company in an interview with Forbes, published today, citing numerous points of conflict with the chief executive officer, Mark Zuckerberg. And now Facebook executives David Marcus is offering what he calls the other side of the story. His post defends Facebook's relationship with founders of empowering and offering unprecedented autonomy. Marcus says no one at Facebook asked him to write the post, adding, attacking the people and company that made you a billionaire is a whole new standard of low class. Oh, interesting. So he's making the argument. So picture this. This guy at Facebook is making the argument because WhatsApp had such a great app, and Zuckerberg decided to pay billions of dollars for it. Now the guy's coming back and said, hey, we made you a billionaire. No, Zuckerberg didn't make him a billionaire, folks. Zuckerberg had to buy him because WhatsApp was growing so tremendously, and he had a European deal that was over the top. Bottom line, yeah, he made his own billions. The announcement, departures earlier this week from Instagram co-founders that they're leaving also. Bottom line is that what we're going to find out here, there's no doubt, is that the privacy issues are large, but they're probably much larger than we even realize, that how far they're actually into our house, our stuff, all of that above, because it's a big number, and you can see that the aspect of the more that information they can get, guess what? The more clicks they get, and every single click, I don't care if it's the 1/10 of 1 cent, bottom line, it makes a difference, and that's where they're at. So we'll see where the Facebooks, Googles of the world are going to be in a bit. What is intriguing here is that if we go over to Amazon for a second, it seems like, a couple weeks ago, everyone's talking about Amazon, breaking up Amazon, if that's a monopoly, the whole ball of wax. It's shifted, from the aspect of Amazon to huge privacy issues. And the huge privacy issue, of course, Amazon actually knows, I would say, as much as, not as Facebook. Facebook knows everything. And Google does too, I guess. But bottom line, I can see Bezos saying, "Yeah, I'm glad that someone else is getting some flack, other than me at this particular point." And what is going to happen though? The social networks are brand new. That's the reality, and I suspect somehow it's going to basically change. Now we'll see what type of change it is, and we'll see how does that affect their bottom line. The privacy issue is a monster issue because there's new generations out there that may not care that that these companies know everything about them, because they don't. Picture this. There's a generation out there right now, and I would say that generation is, whether it's, I don't know, 24, 25 and under. It's definitely like 17 and under that have no clue about what it is walking around without a phone. That's just part of playing. That's part of, whatever we did as kids. That's what they do. And, bottom line, the differential would be that large companies are making money on that on a continual basis and getting into their issues and driving topics into their head on a continual basis, you know. So that's, you know, it's powerful. It's powerful in a big way. You know, there's no doubt about it. The power of persuasion on a continual basis is pretty intense, you know. And if you can do the power of persuasion, and then you have it set up, whether it's in neighborhoods, you persuade this one, meaning on the right-hand side of the circle, the left-hand side of the circle, the middle of the circle. You just start putting these filters out here. Whatever they're trying to basically sell at that particular point, your probability gets much higher that that thing is going to get sold, whether it's good for the person or not good for the person, you know, because the bottom line, that's probability charts. That's just how probability charts go. King dollar out here, up a 149 ticks. Not enough juice. King dollar still looks like it wants to go to lower price. Dow Industrials finished down 106. NASDAQ was off 17. S&P's off 10.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Technology Insider is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go over and take a look at McDonald's. So McDonald's is trading at $165.76. And bottom line, you're right near the highs. The highs in McDonald's are 178. What's so intriguing, McDonald's went to fresh beef, I don't know, a few months ago, and now what they're basically trying to do is, you know, get into this fresh business in general, and that's not easy for an outlet that has 37,000, maybe 300, yeah, no, 37,000 global locations. So this is what they're doing. This is the news out here this morning, this afternoon. They're getting rid of preservatives and fake colors from their burgers in the latest attempt to clean up the menu. The fast food giant has removed artificial preservatives from its American cheese, buns, and Big Mac special sauce, a move that affects 2/3 of its burger lineup in the U.S. And then check this one out. The pickle slices still have synthetic preservative, and a ketchup contains high fructose corn syrup. I can see the ketchup. I don't even know what a synthetic preservative is on the pickle slices. Those pickles are pretty good, though. I haven't had them in years, but they used to always be good. Bottom line is that the Golden Arches, you know, basically, we'll find out if they turn into clean food. You know what's so cool about that, folks, is that over the course of years, you can see that supply and demand works. And, you know, guess what? People want to start eating healthier. Bottom line, if they want to stay in business, what they have to do, they have to basically cater to the customer. The customer wants to be healthier. It would be a great thing, because then you would see we need the soda companies. The soda companies, that's where we really get a scratch, because that's where the diabetes is in a huge way. There's no two ways about that. The soda is a big number. Drink water, folks. Forget soda. The sugar crack of the day is what basically kills you on a continual basis. And guess what? All you have to do is stop, you know, but it's addicting. It's probably just like tobacco. Pretty intense. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. We look forward to speaking there right back here. Kick it off tomorrow morning with Jason Path, 8:30 in the morning. Great program. Just go to TFNN.com. Hit Tiger TV. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.